Are mining stocks the trade of the decade? Am I dare going to ask that question when the junior market's completely decimated and nothing's happening? Am I really going to ask that question? Yes, I am. So let's jump into it. This should be fun. Okay, so there's 3 qualifications that you need for trade of the decade, okay? One is you need prices that have been completely decimated. They've been left for dead. Does the junior market qualify for that? There has to be little investor participation. I'm going to show you some data on that may surprise you. The implication being when investors return, the returns could be outsized. And of course, you need mammoth potential. And I'm not going to talk about just, oh my gosh, the debt's so high. I'm going to give you some other reasons why we have mammoth potential in the junior sector. Okay, do we have left for dead prices? I think everybody in this room can answer, yes, we do. Check. This is the HUI gold mining index ratio to the gold price. And the gold price has moved up, but as I think all of us know, the junior mining stock in general has not. Look at where it is on the far right. The current ratio of the HUI to gold is almost at an all-time low. Here's the GDX to gold ratio. Now, GDX hasn't been around as long, but you can see over the past 18 years, the current ratio of GDX to the gold price is near all-time lows. This is a great chart from Tavi Costa at Crescott Capital. This is, I believe he's using the Barron's Mining Index. That's why I put it in here to have a little bit different index. The Barron's Gold Stock Mining Index ratio to the gold price is near all-time lows. And you can see there on the bottom right, it's trying to break out. So, left for dead prices? I think we could all answer yes, right? Number 2, little investor participation. Do we have investors that are not in this sector that obviously could potentially come into this sector? I think we can answer that yes as well. Even many investors that were in our sector have left or are sitting on the sidelines, right? This is the HUI Gold Miners Index to the S&P 500 ratio where a lot of mainstream investors play, right? And you can see where it is. Look where the current ratio is compared to its 2000 low. Mining stocks relative to the S&P 500, the broad index of common stocks, is near its all-time low. This is an interesting chart you may not have seen. This is volume on the venture index where a lot of our companies are, right? So that's the price of the venture. But look at the bars along the bottom. You can see going across there, up and down, and then look at the last 2 years. The volume in the venture index has been completely left for dead. Nobody's investing. The average right now is 400 million shares traded. The average in 2020 was 3.8 billion. So the volume on the venture index would have to go up 9 times roughly just to match what it was in 2020, not to mention what it was in 2011, not to mention what it might have been in 1980. The potential is enormous. I like this sentiment chart better than just Google searches for gold, right? Because this covers all social media and news. And you can see it bounces around a lot, right? But look what the trend has been. The trend has been down. This is a very good indicator of sentiment that it's just completely absent, for the most part, from our sector. Little investor participation, right? Number 3, does history say the potential is enormous? Do we have enormous potential with juniors? It doesn't feel like that right now, right? But I want to show you some charts, and those of you who have Paydirt, a lot of these are in the book. You can read them in there. There's even more in the book. But I want to give you some examples of what Paydirt looks like, but what the potential can be in this sector. And I'm not just going to give you, a couple examples. There are literally hundreds of examples. That's why I believe we have enormous potential in the junior resource sector. This is the returns of the juniors in the 1979-1980 mania. This is just the mania. So if you were invested 2 or 3 years before then, the returns would have been higher. I'll just draw your attention to the bottom row, average. The average return of these companies in a roughly 13-month period of time was over 2,300%. But wait, there's more. This is the return of stocks that were seen during the Hemlo discovery area in Canada back in 1981 to 1983. What was gold doing at that time? Gold had crashed and it wasn't doing anything. And yet look what these stocks did, solely surrounded by an area close to a discovery, over 4,000%. Here's the mid-1990s bull market. And look at the top 2 rows. Look what gold did and look what silver did. Nothing. They were completely flat. And yet look what these stocks did during this period of time. There was a little mini mania, if you will, in the 1990s, which was known as the nuclear 90s by many miners back then because they couldn't make any money. And yet some stocks did. Over 3,800% return on average during that period of time when gold and silver did nothing. And here's our last big bull market, 2001. So what I did here is I broke it down from 2001 to 2008, then the 2008 crash, and then the 2008 to 2011 advance. So you can see there what gold did. You can see how much some of these stocks gained in that first column. Then you can see how much they crashed. And look at silver. The average silver stock crashed basically 80%. So how many of you have a stock that's down 80%? It's happened before. And look what the rebound was. If you're down 80%, you're thinking, I've got to triple or quadruple my money just to get back to even. Well, you did that and more back then. This has happened, but what we're seeing right now, what's happening right now has happened before. That's the whole message behind all this. 2016, one more. You can see 2016 was an interesting year. Gold didn't really do much. Some people were getting frustrated because we were in the bull market at that time. A relatively short period of time, it was about 8 months, I believe. The average stock during that time, these are all juniors at the time, was more than a triple on your money in less than a year. There are many more examples. These are all in the book. There's more examples. Those of you who have the book know that I interviewed 16 people in the book, and I asked every single one of them, look, you got to give me an example of when you hit pay dirt personally in your portfolio with a mining stock. Here they are. Eric Fire, 5,000%. Ronnie Stofferle, 1,900%. John Hathaway, 640%. Frank Holmes, 5-bagger in Kirkland Lake. Frank, again, you can find 20 baggers and even 50 baggers in this industry. Ronnie Stofferle, 40-bagger on a Cisco Mining. Mark O'Day, 3,000%. Geologist Ron Pear, the best geologist you've never heard of. Frontier made 725%. And my personal mining portfolio rose 400% during the COVID bounce. That's not a misprint. I'm not beating my chest or anything, but that's what happened. I bought the huge crash, and by September of that year, I was up. I think the fuse for juniors has been lit. I wrote an article on the site. It's free. It's by this title. You can read it if you want. It was very popular. But I'm basing it on one thing. Not the rise in the price of gold, not the Fed cutting interest rates, not debt's going to blow up on our face, none of that. It's based on one simple thing, and that is the fuse has been lit because we've already seen money pouring into gold, and this table shows we could next see money pouring into the producers. What I did was I basically tracked the earnings and cash flow of some of the biggest producers from Q2 last year compared to Q2 the year before. Why did I do that? Because the gold price rose roughly 18% in that 1 year period of time. It made a big difference. Also, inflation has been high, but it's basically been figured into costs by now. They basically plateaued. So what did the gold price do to the earnings and cash flow of these companies? And you can see the percent change there for earnings in the middle. You can see the percent change for cash flow. Free cash flow is really kind of the ultimate gauge of what you can really expect for corporate health, right? That's even better than earnings because you can tinker with earnings a little bit, right? Look at the percent change that happened with, well, 5 of the 6 companies jumped tremendously. Newmont's free cash flow rose 1,300% in a 12-month period of time, largely due to the rise in the gold price. And what do we know? Well, the jump in cash flow leads to several things. These companies can increase dividends, they can buy back stocks. Those are all healthy things if you own them. We're also going to see a jump in M&A. A lot of us in the junior sector were wondering, why the heck aren't these producers buying these beat up junior companies when they're so cheap? Why weren't they doing that? They were probably preserving cash and waiting until there was a sustained rise in the gold price. We now have that. They now have cash. I think M&A is going to pick up. And it's still cheaper, by the way, to buy ounces than it is to go explore for them. Number 3, there's a lot of green on the screen for when the generalist investor wants to come into this sector. They're going to see that. When do I think that happens? I think it happens when the S&P, the broad stock market index, begins to turn down. If they go into a bear market, Wall Street's going to be looking around. Where can we put money? Hello, mining stocks. And number 4, this is the answer to your question. The countdown has begun because we know money first flows into the metals. We've seen that with the gold. Then it flows into the producers. We now have the impetus for the generalist investor and some mining stock investors to return to the sector and buy producers. Then the money goes down to developers. Then it goes down to the juniors. We know this from history. That's a very well-known thing that happens with these companies, right? That's why I say the fuse has been lit. It's going to be coming, I think, I'll say it. I think by this conference next year, all of us in this room are going to be a little bit happier. I think the technical analysis fuse has been lit as well. The technical analysis is showing that money is starting to move into the mining stocks. That's what this shows here. Interest is beginning to build from big investors as well. I saw this headline in Northern Miner, and I was like, no, that can't be right. There was more money raised in the first half of this year than in any half of the prior 10 years. Believe it or not. It was 62% higher than the same half last year. $6.8 billion came into mining stock financings versus $4.2 billion the year before. It's the highest amount in the decade. Since then, just through mid-August, almost $3 billion has been raised. So that trend is continuing. There were 25 IPOs during that period versus 11 last year. This is contrary to a lot of the sentiment that's in the industry and contrary to how a lot of us feel, right? But look at the data. What's it saying? Big money's moving into the sector. Add it all up. You have a historic breakout in the gold price. Producer margins are jumping and will be higher next quarter. Gold's continuing to march higher. Those margins are going to be even greater next quarter. M&A is more likely now. More money raised in financings in 10 years. Gold rose, I didn't show this, but gold rose in 9 of the 11 last rate cuts. Gold stocks rose, just the index, rose anywhere from 200 to 408% in the last 3 rate cut cycles. Mining stocks are deeply undervalued relative to any other asset class, so they meet that criteria. I love this. Think about number 7. The selling in the junior market is mostly done. It's mostly done. But the selling in the broad market, in the S&P common stocks, hasn't even started. When we begin to see that shift, that's when I think we're going to see more money flow into our sector. Number 8, low participation of miners from generalists, almost 0 in the juniors. Rick Rule, you got to love this quote. I've been a fairly consistent deployer of capital for the last 3 weeks into the disgust of people in the sector. He loves saying that. He only said that like 2 weeks ago. Gehring and Rosenwag, these guys had the #1 performing commodity fund in the world, like it was about 10, 12 years ago. The current opportunity is as compelling as any as we've seen in the gold market. So there you go. That's what I think the position that we're in right now, and why I think the fuse has been lit for the juniors, and it's coming. Hey, after the Gwen Preston acquisition, we've built a new website, we've built a bigger team. I'm really proud of what we're doing there. You all know Peter Kraut there on the left. He's our silver guru. He's speaking tomorrow morning. And next is Jeff Volks. He goes by JV. He's been running the free site now. He's getting more and more involved in the Gold Advisor side, so you'll be seeing more about him there. Then Jen Elsey, our new executive admin person. Jen, where are you? Wave your hand. There she is. If you have any questions about credit cards, emails, anything at all, she will solve that. I promise you, she's awesome. I'm glad she's with us. And Mark Goddard is the gentleman on the right. So he won't like that I'm telling this story. He's one of our IT guys. You know the high IQ organization called Mensa? You have to be really high IQ to get in it, right? Mark tested for the organization above Mensa, okay? So this guy is super, super smart. He's great, though. He's supporting our team as well. I am ready to rock and roll. Our team is ready to rock and roll. The websites, we finally got the bugs worked out, is ready to rock and roll. That's the book on the left there. We have physical copies here. Peter and I both have our books out there. If you're interested, cash discount if you would like one. Yeah, I see you waving that, sir. Thank you. And then the Paydirt Prospector, the newsletter, is on the right there. I just got back from Beaver Creek, and I met with a lot of companies, including all these, I think. And I also met with some new companies. So there are some new picks coming. We're going to be doing a little house cleaning here in the next month or so. There will be some exciting new picks coming. I will make a point to make sure that I am participating in this next bull run. I missed out in 2008. I was working with Doug Casey and the whole group back at the time, and we recommended people, hey, if you have the nerve for speculation in the middle of the great financial crisis, the crash there in 2008, you might want to look at picking up some juniors here. And we got a lot of thank you letters in like 3 or 4 months from people that had done that. And they didn't double their money. They were going up 5, 6, and some even 10 times. I witnessed that, and I didn't participate, and I vowed to myself I would not let that happen to me again. COVID crash came, very scary time, right? Very scary. But when I saw that gold-silver ratio go to 120, I thought, this is ridiculous. I'm jumping in. And I did. I jumped in. I bought silver a couple times, and I loaded up on mining stocks. And I swear to you, by September, my entire portfolio, not one stock, my entire portfolio was up 4x. I see a similar opportunity here now that we have today. We don't know the timing. We don't know when it's going to happen, how big it's going to be. But I think our time is here now, and I do think the fuse is lit. So, all right. I hope that was useful, everyone. Thank you.